Hello, fellow traders. This is TheRumpledOne coming to you Tuesday, July the 16th. The year is 2024. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And as always, have your risk management in place. Never lose more than you're willing to lose on any one single trade. Walmal. Yesterday, I think it was one of those days where you didn't even have a trade on.
Yeah.
But you finished the day, though.
Yeah, I finished the day and had an okay day, meaning I made core. That's what matters. And it was just, there was a guy at one point in time on FOREX Factory. He used to call himself the FX sniper. I don't know if you knew about that guy or not, but that's what I felt like yesterday. It was the type of thing where just honed in on certain trades, and just look for the opportunities, and got in, got out, took my tips, was happy, walked away, And sometimes that's what you got to go and do. Let me turn off that alert. It's just telling me that right now we're crossing over the H4 open, which just opened this hour from my broker anyway. But that was kind of yesterday, and then the nice thing is that today we had some. Oh, then yesterday also I picked up a bunch of pips also on the news drop, which was nice. So that helped me out a little bit. And then today we're sitting here, and I think the range for the day was something ridiculous, like 21 pips, something absolutely incredibly ridiculous. And then the news came out, which was the core retail sales. So obviously, I think people were sitting there going and holding on and not doing anything until they had some type of movement based on by the news. But in any case, the news came out, and what happened was when the news came out, in that first minute, it dropped like 22, 23 pips, and there was I want to say an 8 pip wick on that candle on the bottom side of it. So what I did was I measured the body when that candle closed. I did what I always do. I went and measured the body of that candle, and the body of that candle was about 16 or 17 pips. Found the midpoint of the body, not the midpoint of the candle, but the midpoint of the body, and I drew myself a horizontal line, and that line was looking at it right now, it's 2969.5. So that was the midpoint of the body of that candle. And what that was to me was a line in the sand. As long as it doesn't go above that line, this is going to, my opinion was that more than likely this market was going to go and continue to drop. And so we had a candle that ran up. Very next candle, it ran up about, I want to say 3-4 pips, something like that. Then the next candle after that, it started to run up, and it went up about 2 pips. And then at that point, it turned around and started coming down. And when it came down, and what it did was it came down, and then it didn't close where it closed. It wasn't at the bottom of the up candle, but the next candle after that, which actually turned out to be a bullish candle, but it continued to run down. And at that point, it broke the bottom of the close of the first candle of the news. And so I said, okay, I'm going short here. We now got an opportunity to go short, so I went short, and of course, what does it do? It runs up a couple pips, then down, and runs up, runs down, and then finally it goes after about 3-4 minutes. It finally starts to drop, and at that point I was in. I actually had some nice pips, but then I got a bullish candle, and I said, you know what? I think this thing is going down further because obviously that line that I drew up above, it didn't even come close to it. This is probably a bearish things going on, the news. I looked at the news at that point. The news was pretty good for the U.S., which would mean that this market would be bearish. So I got a flip-flop box, so I put a second trade in. And so then it ran down very nicely. It ran down like 2-3 pips. And then about 3-4 minutes after that, got another flip-flop box, and I took the chance and went in on that one. And it continued down. And then I got out, I believe, of everything somewhere around 30, oh, no, not 30. That'd be really nice if it was, but somewhere around 45 on all 3 trades. So made my core and plus some, which was really nice. But it was just one of those days where, I've got 3 trades for the day, and I'm sitting here with close to 30 pips, and sort of like, can't complain. It works out that way. Some days it works out well, other days it doesn't. And that's sort of like, if you remember last week, I was talking about the fact that I had at least one day, if not 2 days, I can't recall, where I just didn't even take a trade. So there was just nothing out there to take the trade with.
Yeah, we had the waiting with Walmal as opposed to trading with Walmal.
Exactly. And sometimes that's going to happen, and but the nice thing is that, okay, well, guess what? With the number of pips I made today, it paid for core for today, and it paid for the day I didn't work last week. But the reality was I was working, just that the market wasn't working for me. So, that's kind of what my trading day was like. I'm up 32.3 pips for the day, to be exact. I just went and looked it up.
Again, I was just looking on that big drop, and you said you put your line there. It was at 69.5. Well, it's funny because I've got the state, the candle state indicator going. So we had a lower followed by an inside bar, then we had a higher, and then that was followed by a lower, which was followed by an outside bar. And so it's like if you were just taking the inside and outside bar breaks, oh man.
Yeah, you could have made a bunch of money.
Right.
And I think that, Chiro, I think that really points to something that's important to note here, and that is that, it's not necessarily the method that you use, because multiple methods, multiple reasons could be used for going and taking those trades and making money on it, and it's less about the method and more about the consistency. And the consistency, has to hinge around going and having your risk management in place. And, we talk about it all the time, but having your risk management in place, and just being able to manage the money. When I combine the two, and I know you're not supposed to do this, so you can go and yell at me. But when I say risk management, I'm talking about the risk management of how much you can lose, but also the fact, risk management also is that, hey, if I'm in a trade and I got quote unquote paper money, well, if I don't go and you manage that as well, then I could, let's say I'm in a trade and I'm in heavy, and let's say I pick up $100. I'm just throwing a number out there, and I'm up $100, and I let it further away. What's the point? What is the point of that? It's just sort of like that's kind of risky too, to do that, because if I do that too often, then I'm not going to have enough winning trades, and certainly not enough winning trades with enough money behind it that's going to cover for when I do take a loss, because everybody takes losses in this market. Today's great. My efficiency is 100%. I promise you that is not a normal day. It happens, it happens maybe once or twice a week, but most days I'm sitting at 75, 80, 85%, and you have to go in that 15% that you're losing there, if you're not going in, managing it correctly, that 15% can overwhelm, what you've made if you're not paying attention. So I know I kind of went on a little bit of a rant there, but it's just, and the reason why it's, somebody might even say that, well, that sounds personal. Yeah, it is personal because, in the beginning when I was first learning how to trade, that's what burned me every time. So it is
Yeah.
personal.
Yep, I hear it. And it looks like we went through the launch pad. I think when we started, we were down around 42, 43. It looks like it went through the 50, and now it's coming back down at the bottom of the hour here.
Yep. Yeah, and the thing is, I don't know how much more movement we're going to get for today. We've got 42 pip small range for the day right now, at least on my broker. But the reality is that this may settle down, and the reason why is because we got red news for every single day for the rest of this week, and so it may settle down, and again do this waiting game again of waiting for the news of tomorrow. It just seems like that's what the market's liking to do as of late. And I'm sure somebody has thought of this already, or has been thinking this and may not have left a comment. But with these smart ranges being so small, where are you making your money? And I'm going to tell you, there are two places where I've been making money. One is the running away from the H4 candle. If you remember when we first started this video and we heard the beeping from my machine, I don't know if it got picked up by the recording or not, but what was it doing? It was running away from the H4. And right now, we're right at the H4 open again.
Yeah, and
29.47.
Yeah, when that news dropped, it also at 29.62 it crossed below the weekly open, and then call it 29.60 it crossed below the daily open. So
exactly, and it's I remember some papers that you had written way back in the day, probably like around 2000. I'm guessing 2010, somewhere around there. You can correct me on it. The whole idea of just drawing a line in the sand, and then just taking the trade based on where it crosses over. I remember you were saying in one of those things where all you do is draw a line on the chart, and then you trade in the direction of the color of the candle. And that's all you got to do. Trading is just that simple. And I remember saying, this guy's just full of crap. But the reality is, what people aren't taking into consideration is that, that's exactly what it is. And you're going to win sometimes and you're going to lose sometimes. But as long as you control your losses, it doesn't matter because that's what you do. I mean, think about this. If you were to go and put a trade in, okay, at the crossover of the weekly candle, okay, so let's just go take that as an example here, okay? You could have been where, from the bottom of that chart, where it bottomed down, if you got a perfect trade, you could have gotten 23 pips. Then you could have, when it crossed over the daily, you could have gone and picked up, another 20 pips. Then when it crossed over this hour, when it went and crossed over, so you could have, right there, you're talking about 40 something pips,
right.
And then when we had the open, okay, and then it did nothing, and then finally it dropped. And if if you're good, you could have picked up 4 pips in one direction, and then you could have gone the other direction. You could have picked up another, 5 pips, and then you could have gone the other direction. It's like you just keep on stacking them on. Now the question is, here's the hard part about it. When do you stay in a trade, and when do you get out of the trade? That's where the method really comes in. Because the method, everybody looks at the method as, where do I get in? What's my entry? What's my entry? Ladies and gentlemen, okay, let me tell you something.
And non-binaries.
It's just as important to know where is my exit as it is to know where is my entry. Because the thing is, I could go and get into a trade, and wind up being up 20 pips, and because I didn't know where to get out, I could have it all go away and actually even take a loss.
You know what? And talk about all going away. That 15 minutes, fastest 15 minutes in trading is just about going away. So, fellow traders, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.